Alright, let's bring this down. Hello, hello. Whoa, 8 likes. Wow. Okay, I'm pretty sure we're about to see more people joining in now, as the notifications that we're live should be heading to everyone's way. Okay, well, welcome to this week's live stream, this Tuesday's live stream. As you guys can see in the title, we're going to be talking about the S&P 500, or ticker symbol SPY, specifically SPY. So I've been talking about, the S&P 500 potentially going to 600, right? I made that ridiculous call out, and it seems like everyone is now following along with that $600 target. It seems like everyone has their eyes on that magical whole number level, right? So I want to give you guys some technical reason as to why we could be going to that level actually this time around, right? Because last time, everything seemed a little bit shaky, a little bit uncertain. We're still seeing the volatility index jumping up higher on some days and coming right back down, being smashed back down. So there's a lot of uncertainty going on that breeds fear, right? So this time around, I want to specifically go over what we could be seeing and looking out for to get... Okay, I think we're back. Okay, we're back. Okay, perfect. So, I want to quickly go over some very popular technical indicators, right? So RSI, right? So RSI is showing some really good overall strength the past couple of days. Let me bring my mic a little more forward here. So as we're making this rising wedge, which I've highlighted a long time ago, we're also seeing the RSI showing higher highs and higher lows. Now, that's inherently not a bad thing, right? We want to be seeing, coherent price action and RSI follow through, and the RSI has been staying between a range of 55 to around 68, 69. That's good, right? That's very, very good. That shows that the overall relative strength for the entire price action and even the price momentum is very, very strong. So for the RSI, it checks out. We're going higher and higher and higher. There's a lot of good bullish momentum. Now let's take a look. Okay, let's take a look at MACD, for example, MACD, right? So MACD is a little bit more shaky here. However, it simply is just showing simple consolidation as the price continues to form this macro rising wedge while moving higher, right? So we're clearly seeing higher highs and higher lows, which is the reason why we're making and forming this macro rising wedge. Now, if I go on the weekly time frame, right, it looks even better, right? The MACD here looks even better because it simply looks like it's consolidating, literally, right? We've made an actual bull flag on the MACD, right? So as long as we're continuing to seeing this this momentum here, as long as we see this blue line here, this dark blue line staying above the red line, as it potentially can break out to the upside, as long as we head up higher on the price, then we should be good as well on the MACD. So this one also checks out, okay? Now, there's another indicator that I want to take a look at. Where is it here? The DMI, right? So I'm not going to be going over what the DMI is, but I teach my students how to use this indicator to a very, very specific, detailed breakdown of how to use this with the overall price action. But overall, the DMI looks pretty good. The ADX, this red line, ADX is also something that I also teach as well, but I won't be saying it here. So ADX is going down. That's not that good, but we're also in consolidation mode, right? We're still making this and forming this very, very, very visible chart pattern, this rising wedge. And we've been going higher and higher, allowing the D plus line, this blue line, staying over the D minus line, this orange line, right? So again, DMI also checks out. So all of these three indicators, these technical indicators check out. Now, I want to specifically go over something else. Okay, let's take a look at the QQQ and SPY ratio. Okay, So basically, in essence, right, I'm gonna keep it very, very short here, right? In essence, this ratio is going to be looking at where the QQQ is in relative to SPY. And so far, as you guys should know by now, the Nasdaq has been actually lagging the broader benchmark markets of the S&P 500. Right? If you guys didn't know that, well, you guys should know that. Right? That's been happening for the past, I think, almost 2 months now. And we've even seen the Russell 2000 having a lot more strength and a lot more market internal strength, just overall good market breadth in the Russell 2000 alone compared to Nasdaq. So when you're comparing Nasdaq to the S&P 500, you should know that the S&P 500 is obviously leading. Now, in relative to this QQQ over SPY ratio, we're finally seeing the QQQ starting to poke out and finally literally catch up to what the benchmark markets have been doing, the S&P 500. And thank you guys so much for 9 likes. Let's see if we can get to 10 likes tonight. So basically, this ratio is giving a nice little pop here, which could indicate that Nasdaq can most definitely head up higher and eventually catch up to SPY. Alright, so let me actually give you guys a view on QQQ. Alright, so here's QQQ, right? It's literally right below all-time highs. And I believe after hours, it reached a new all-time high if I'm not mistaken. But based on today's close, we're about negative 0.60% away from the current all-time high price print. So obviously SPY has been making that continuous all-time high price print trend. It's literally a trend to continue to make higher highs. But with Nasdaq, this QQQ over SPY ratio seeing a nice pop, especially with after hours today with big tech earnings and other earnings, but especially Google's earnings providing a lot of good strength and bids after hours, we're starting to see Nasdaq literally almost move in tandem with the overall benchmark markets. So this QQQ over SPY ratio is something that you guys should hone in on for the next couple of weeks, and especially this week as we have the most important mega cap tech earnings, I believe on Thursday and Friday if I'm not mistaken. I think it's either tomorrow and Thursday or Thursday and Friday. Okay, the information is escaping me right now. So whatever the days are, I know for sure it's on Thursday for Apple and Amazon. We need to be looking out for Nasdaq, right? We want to see Nasdaq making finally a all-time high price print, since the S&P 500 has been doing that for over 2 months, right? So keep this ratio in mind, right? If you want to take a look at it, just put QQQ over SPY. All right, that's what you guys can do if you guys use TradingView, and it simply gives us this very, very nice ratio here. And today, and well, this entire week so far, right, this is the weekly time frame, we're getting a nice pop up so far, kind of breaking this lower low and higher, lower high and higher low trend. All right, so we have a very nice wedge that basically broke out this week so far. After Friday's nice big move up, and then Monday's pullback, and obviously today's very, very nice move up as we saw a bunch of software stocks staying very strong, which is now my next segue here. Okay, that explains why we are seeing Nasdaq also rallying to highs here. All right, so software was very, very strong. IGV. What did I post on my Twitter page and near my threads a while back about IGV? Well, I said IGV is making this very, very, very large cup and handle chart pattern. And I said there could be a major breakout over the neckline resistance level of $89 on this cup and handle. And I asked people publicly, is this bearish? Could this be bearish for the markets? Absolutely not. All right, it was a rhetorical question at that point. And so what has been happening after we broke over 89? Simple and continuous higher highs. And so today, we finally recovered back to the previous pivot high point, and we broke over it, officially giving us a new higher high price print and new all-time high price print of $94.06. So this one has also, this leader, and well, not even leader, this leading group alone, the software sector ETF, IGV, has been able to contribute mostly for today's Nasdaq's run to the upside. Now, why is this all pertinent to S&P 500's target to 600 potentially, right? I need to add a little asterisk there, potentially, right? So if QQQ and the overall tech sector begins to reignite its momentum, SPY will most definitely follow along that reignition of bullish momentum, because as you guys should know by now, the S&P 500 has been flirting with this ascending support trend line on this macro rising wedge. And it was getting a little bit shaky here as we're seeing little big pops. Okay, it's an oxymoron, I know, but it's literally little big pops in the overall volume bars here for the past couple of weeks. And now, so far, from mid last week to today, we've been holding at this. Okay, we are back. Okay, so before I was interrupted there by my streaming software, we have the price sitting right at the daily 21 SMA. All right, and again, it's a little bit uncertain as to where the price can go, since the price is literally sticking right in between my daily 10 and daily 21 SMA. So we have actually retested the daily 21 officially, since we broke back above it back in early to mid September. So it's been quite some time now. And so as we're getting near the convergence point, okay, of these two trend lines, and now that we're riding right on top of the daily 21 SMA, even if we're still staying over it, there is still that little factor of uncertainty and fear that can explode and make the price break below the daily 21 SMA and break below this ascending support trend line. Now, that is the current upside risk that we need to consider. But going back to that $600 target, right? So if Nasdaq continues to rally up higher, the S&P 500 will also piggyback on that as the leading groups, the actual leaders of the leaders, begin to make their way back up higher with a lot of bullish bids, which will allow the overall S&P 500 to also continue higher as well. Now, with even more important earnings coming out, I believe on Thursday after hours for Amazon and Apple, okay, it will all come down to what they report, because that will provide the exact, well, I guess, next couple days of market sentiment for the overall markets, like the benchmark market, the S&P 500, and overall Nasdaq as well. So with the combination of the QQQ over SPY ratio showing that Nasdaq is gaining more steam and more strength and more momentum, finally, I mean literally finally, quite literally, we've been waiting for this to happen, since Nasdaq has been, again, lagging compared to even the likes of the Russell 2000. We should be seeing the S&P 500 gaining even more steam, and possibly even, and hopefully ideally, breaking over this rising wedge, right? And I also mentioned this when I first noted this macro wedge that could be forming a month or over 2 months ago at this point now, that usually during a bull market, the S&P 500 negates any bearish chart patterns, especially when they're huge like this, right? This macro rising wedge spans, let's see, 4 months, right? It should be nearing 4 months at this point. And so whenever we see some very, very good consolidation that also involves the price action making higher highs and higher lows in a very textbook manner, we tend to negate whatever that bearish chart pattern is, and usually that turns into that chart pattern that begins to form when the price begins to consolidate, usually turns out to be a rising wedge, just like this one. And usually, during a bull market, the price breaks over to the upside out of this ascending resistance trend line to completely negate the rising wedge bearish chart pattern. And so, yet again, there's another layer here to understand about the S&P 500 as to the reason why it can reach $600. Does that make sense, guys? Let me know in the chat if that makes sense. Okay. All right, I think you guys got the message, right? Okay, so basically the secret sauce here is to have all of these indications that I've just went over with you guys to completely come together and harmonize with each other to be able to move towards the $600 target by the end of this year. Now, I want to give you guys yet another layer of confirmation that we can possibly use to really say that the S&P 500 can possibly head to $600 by the end of this year, right? So I mentioned this to my CFO Stream Watch readers and the private members of the private CFO Discord, but there was a huge buy of a specific S&P 500 option contract. All right, so we actually had began a starter position on this one as well. So we piggybacked along this huge buy that we saw. So someone, or maybe a small group of people, well, it has to be someone, but they bought 10,000 contracts outright of, write this down guys, of the 615 strike call contract that expires on December 31st. And again, let me say the contract one more time. 615 strike call contract that expires on December 31st. Now, here's the thing. You guys should know by now from the last couple of live streams that I've done, or even just the videos that I've done, this isn't the only contract that has appeared in the options flow for the S&P 500. That clearly indicates that there is going to be possibly a huge rally to the upside towards this very, very nice whole number level of $600. All right, so we even have some spreads that were opened to have this nice, to be a part of this nice potential run to $600, right? We I believe we opened that position almost 2 months ago now, I think. Yeah, I think almost 2 months ago. All right, so if you guys want to know the exact time frame, you guys know what to do. DM me on Instagram at ChartsFocus1 to become a reader and also become simultaneously a private member of the CFO Discord, where you can find that specific swing trade idea of these S&P 500 spreads. Okay, these vertical spread or vertical debit spreads, right? So again, those are your main reasons to be looking at, right? So I went over just general popular technical indicators that are continuously showing synonymous and complementing indications that we should be seeing a higher high and ultimately a new all-time high price print, and possibly in the next couple of weeks as we head into the end of this year, we can hit that $600 level. And that's just from the lagging technical indicators alone. But as I've shown you guys already with the QQQ, okay, it's the next indication to look at. Over SPY ratio, we're seeing NASDAQ finally garnering enough strength. And as we're seeing a bunch of mega caps, after being quiet for the last couple of weeks, even though we did see some underlying large put sales for, for contracts that expire like next year and even next year coming in, we're finally seeing a lot of good options activity and bullish call flows into these big major mega cap names as we're heading into their earnings. All right, so I guess earnings was what the major leaders and mega cap tech leaders needed to actually have some sort of options activity. So overall, this is very, very good because the QQQ over SPY ratio is clearly showing us that NASDAQ is regaining its momentum and possibly its lead over the benchmark markets. Because again, NASDAQ tends to lead bull markets and bear markets, or uptrends or downtrends respectively. Okay, whenever we do see some sort of a downturn, for example, in the markets, NASDAQ tends to show that first, right? But instead, right now, currently, as we're in an uptrend, NASDAQ has actually been lagging. So based on this ratio from QQQ compared to SPY, we're seeing NASDAQ finally heading up higher, which can allow us to see the overall benchmark markets, which is the S&P 500, gaining enough energy and momentum to follow along with NASDAQ to continue to go up higher and eventually hit that $600 target. Again, QQQ is only 0.65-ish% away from its previous or current all-time high price print of $503.52. So again, there's a lot of room left for QQQ to run as well after lagging since August, right? Since August. Can you guys believe that? Since August, QQQ has been lagging and seeing more weakness compared to the likes of the Russell 2000, which is crazy to me. All right, we saw overall market breadth or composite market breadth on the Russell 2000 being a lot stronger compared to NASDAQ's overall market breadth internals, right? So market internals. So that was very surprising to see back in like late August to all the way to mid-September. But now we're seeing that kind of change. We're starting to see NASDAQ reviving itself and seeing more bullish bids coming in as we head into all of these major tech earnings, and especially the mega cap group tech earnings. Okay, so we talked about that now. And lastly, okay, last but not least, I told you guys about the actual technical chart pattern alone on the S&P 500. So for anyone who's just joining in now, make sure you guys watch the entire replay because I literally go over 3 exact reasons why. I'm gonna go over the last one here with you guys if you guys are just joining in, but you guys need to hear the 3 exact reasons why, or the entire secret sauce, quote unquote secret sauce, as to why the S&P 500 can target $600 by the end of this year. So the technicals here clearly show us this very nice rising wedge, but usually these rising wedges here, these bearish chart patterns tend to not work out, as during an uptrend or a bull market, SPY breaks upwards, completely negating whatever bearish chart pattern that it preceded, right, during that breakout. So, or after that breakout. So usually these chart patterns tend to form into these very large macro rising wedges that last for months or weeks. And in this case, it has been going on for at least 4 months at this point. And so I wouldn't be surprised if we completely negate this rising wedge and then we just simply shoot straight up and break over this ascending resistance trend line. Okay, now on top of this technical chart pattern, that could potentially, most likely, be negated, we have those option flows, right? We have those option flows. So maybe I could say it's 4 different factors or 4 different indications that need to work cohesively to bring this overall momentum back into the S&P 500 to create this continuous uptrend of new all-time high price prints and head into $600 by the end of this year. Okay, so again, options flow has been continuously showing us that there's a lot of call flow, and again, these contracts are still staying with their full OI, right? Open interest for some of them, but most of them, they have been holding a good amount of OI in every single strike that I've mentioned in the past, and for all my current readers and private members in the CFO Discord. And I've already told you guys the exact contract that I actually saw today come into the options flow for the S&P 500 or ticker symbol SPY of that 615 strike call contract that expires on December 31st, right? We saw an outright buying of 10,000 contracts, and we actually joined. Right? I actually signaled in the CFO Discord during Power Hour, the last hour of the market session here, that we're going in with the starter, and tomorrow it should look absolutely amazing since we're up, I believe, nearly 3 points from after hours here, right? So from the closing to after hours to even overnight now, we are nearly up $2. Okay, but I believe, if I'm not mistaken, if I just check out the S&P 500 futures here. Yeah, so we're seeing a little bit of a pullback now, which is fine. This is completely fine. But I would also like to note that on the S&P 500 futures, we're seeing the price gapping up over the daily 10 SMA. Remember, when I was talking about the technical analysis for the S&P 500, we were stuck in between the daily 10 and daily 21 SMAs because of the fact that we're seeing this uncertainty growing, which breeds fear. And so the futures market now is showing that the price is over both of the daily 10 and the daily 21 SMAs, and we're out of this tight sideways consolidation that we're stuck in between the daily 10 and daily 21 SMAs, and we're able to break over it currently overnight. Okay, we're back. So currently overnight, right, we're seeing that S&P 500 futures showing the price over its daily 10 SMA, which I would assume that the S&P 500 itself, ticker symbol SPY, can also have a nice gap up tomorrow and possibly staying over 584 at market open, or even just close to like 583, and that should be good enough, right, to provide enough buyers and defensive buyers especially to hold over this daily 10 SMA. Okay, so hopefully that makes sense, right? So again, one more time, the ES or S&P 500 futures is up, right? It's up 10 points here, right? And so far it's moving back down, and we're about to see a potential retest of the daily 10 SMA on the S&P 500 futures. And so tomorrow I want to see the same exact thing, right? I'm expecting the same exact thing where we gap up possibly to like 583 minimum, and then we come back down to retest the daily 10 SMA and use it as new support once again. Is all of this making sense so far? So that's a little bit of a preview as to what you guys should be expecting tomorrow. But then again, based on the analysis, the initial analysis that I gave you guys about the S&P 500 and even SPX, right, the S&P 500 index. Now again, this is the ETF and this is the index, ticker symbol SPX. Okay, the initial analysis where I've shown you guys the reasons why we could potentially see the S&P 500 ETF and the S&P 500 index heading towards $600 and $6,000 respectively. Okay, hopefully tonight's second analysis or second layer of technical analysis can provide some more reasons why you guys should most likely just believe that notion that we can be seeing a complete run to the upside and takeout of shorts overhead to squeeze up higher and head towards that ridiculous and outrageous call out that I made months ago of the $600 whole number level, or for the SPX or the S&P 500 index, 6,000. Does that make sense, guys? Okay, let me know in the chat if that makes sense. Okay, I see you guys there. Okay, so that's basically it for tonight, guys. I really want to give you guys more technical reasons. Definitely look out for that QQQ over SPY ratio. It's very, very important. I gave you guys the reasons why, even based on the options flow as well. Very, very important. But overall, all those 3 to 4 factors, I would say 4 at this point, but 3 to 4 factors are very, very important to work in harmony in a very cohesive manner to give complementing signals and indications towards all the market bulls to give enough reason to really just continue to bid the price up higher towards this outrageous call out that I made for the S&P 500 to $600. So there you have it, guys. The secret sauce, the quote-unquote secret sauce, consists of 3 to 4 ingredients, right, to provide enough success for the S&P 500 to rally to the upside and eventually hit that $600 target by the end of this year. Alright, so that concludes the live stream for tonight. Thank you guys so much for watching. Thank you guys so much for even liking. Again, I really like the amount of support that you guys have been showing me. We've been growing exponentially, as I've stated multiple times. We're almost nearing 500 subscribers. I think we can reach that by the end of this quarter, or at least the end of this year. And let's continue to absolutely rock the markets and continue to do extremely well, as all of my analysis has been working very nicely to the upside and even to the downside as well, as you guys should know by now for the last couple of months, specifically 2 months. All right. Okay, so I'll see you guys on Thursday at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Again, the same time as usual, and hopefully you guys can do really well. On Thursday, we will be having Apple and Amazon earnings, if I'm not mistaken. If I'm wrong about that, my apologies, but we have all these mega cap tech earnings going off this week. So yeah, just stay frosty or stay on your toes, and good luck tomorrow. Have a great rest of your night.